everyone. Welcome back to session 2 of this journey for financial planning for women. Thank you for joining me in today's session, wherein we will be talking about the current financial landscape assessment. Before we start, a quick reminder, I'm not a financial advisor by profession. The information that I share here is based on my learnings and experience. It's intended for education purpose only. If you have particular situation, do consult a proper educated financial advisor. With that, let's dive in. In previous session, we have already talked about how to do a financial planning. I hope I have inspired you enough to continue with this journey, and I have also helped you and made you aware of different challenges that women face during the financial journey. Also, in this current financial journey, we would also do a proper assessment of how to assess and include these challenges into a financial journey. With that, we will continue with the next step, which is creating a current financial landscape. Financial landscape is like building a house. To build a proper house, you need to build a proper foundation. The having a current financial assessment is building like this foundation for the financial journey. This is like taking a snapshot of where you stand today. This would also help you to answer questions like, am I financially healthy? Do I have any gaps in my financial journey? Am I setting a realistic goals based on my current financial situation? These questions are very critical in designing your financial journey. If you have already started your financial journey, these questions will help you to understand the gaps in your current financial plan. With that, let's dive in. So current financial landscape assessment would include total 6 to 7 steps. In first 6 steps, we will do a detailed analysis of a financial health, and in 7th step, we would bring this together and do an overview of a financial situation for an individual. So let's start with first step. First step in financial journey is understanding your net worth. Net worth is nothing but assets minus liabilities. We'll start listing out different assets that we have, like cash in hand or in a bank account, investments like mutual funds, stock market, retirement accounts, real estate. Here we would start listing out the value of the property, business ownership if you have any, personal valuables like jewelry, vehicles, and any other valuables. We will add the values for these belongings here and sum them up. And at the end, we will sum up all the asset values together, which is amount X. Similarly, we'll do the same kind of exercise for liabilities. We'll start listing out different liabilities that we have. These would be like credit card, loans, personal loans, health related loans or medical loans if you have any, personal loans, home loans, etc. We'll list out the amounts for these sections and we'll sum them up at the end, which is value Y. When you deduct X from the Y, you will understand what is the net worth. This value can be positive or negative. Positive value means that you have more than you owe, and this is a good indicator of your financial health. If this value is negative, don't get overwhelmed with it or don't worry about it. This is a good starting point for an improvement. The next is tracking your income and expenses. This is kind of having a cash flow statement for an individual. So in income, we will start monitoring what is the salary in hand, what are the incomes from side hustles, and what is the passive incomes that we have. Passive incomes can be a rent from different properties if you have, or the dividends that you receive from the investments. So we'll start listing out the amount that for every section, like salary, um, or your side hustle income and your passive incomes. And we will sum them up at the end, which is value A. In the expense section, we would do a similar kind of exercise where we'll start listing out the different kind of expenses. This can be a fixed expenses, list them out individually like rents, insurance, subscriptions, or mortgages that you will have. Second will be a variable expenses like transport, grocery, or anything related to entertainment. And last would be your debt related expenses. So this can be a home loan, personal loan, etc. Once you list out the amount for these sections, we would sum them up in the end, and this would be the number B. When you deduct A from B, this would give you a surplus amount that you have with you, and this is your saving. It can be a positive or the negative number. Positive number is good because that's an indicator that what is the amount available for an further investment or future investments. And the negative value will tell you that you need to modify your lifestyle and your income statement so that we would bring this number into a positive side. Now we will go to the next step, which is step 3. Herein we are going to assess our savings. We would, as in the previous step, we have also understood that our surplus is positive. We would try to understand what we have done till this point with that surplus. The first question that I would ask is, have I created an emergency fund for myself? The second question would be, have I started investing towards a retirement fund? Next question that I would ask is, am I doing a goal-based saving, or am I just receiving a surplus amount and diverting them into a different kind of investment tools? This would also help us to understand how our financial journey looks like and is it planned well enough. The next step, which is step number 4, is understanding your debt. So debt can be a tool or a trap. If you use them wisely, they would act as a tool for your personal growth. We have already done this assessment in understanding while understanding the net worth for the individual. In this section, we would do it in a more detailed manner, wherein we will start listing out again a different kind of debt that we have, like credit card loans, house loan, personal loan, student loans, and any other kind of loans that you will have for yourself. We'll start listing out the total amount that we owe for all of these categories. Then in the next section, we would start listing out the percentage interest that we are paying on these um, loans or debts. And at the end, we would start working towards the monthly amount that we are paying on these different kind of categories. We are also asked the question, are we paying these EMIs on time, or are we paying additional penalties because of fault in payment? This would help us to understand how we are doing on a debt side. Are we still having a manageable debt, or we are getting overwhelmed and worried due to the different debts that we have? The next step is step number 5, wherein we start monitoring the insurance for your financial assets. So insurance can be a different kind of insurance. It can be a health insurance, personal insurance, or term plan, or disability, or critical illness related insurances, home insurance, vehicle insurance. So we will start listing out all the insurance and the amount that we pay against them. And at the end, we will start doing an assessment that are we overly insured? Are we underinsured? Are we insured enough? This is a risk mitigation strategy for yourself as well as your financial plan. So it becomes very critical to understand the insurances that you have with yourself. Can we merge together? and reduce the EMI that we pay. This would also help us to get more amount in your saving kitty and which is ready for an investment. With that, I will go to the next step, which is step number 6. Herein, we are going to talk about the credit score. Credit score is nothing but a financial report card for an individual. If the score is positive, you have access to different kind of loans available in the market at the lower interest rate. But if this number is negative, that means you need to work towards it, pay your bills on a timely fashion, and reduce your credit utilization. This will help you to bring your negative score into a positive category. There are different countries that do this credit score analysis once a year free of cost. But if you need an assessment for your financial health on a 6 months basis, the charges are minimum. But I would do advise you to get this credit score for yourself to understand where you stand on your financial journey. These all the assessments would differ based on your personality and your risk appetite. I would advise you to do it in very detailed fashion. To the 3 months back statement would be your good starting point. I do monitor my income and cash flows monthly basis. I would do advise you to do that as well to understand how does your financial health looks. So with that, this brings us to last step, which is step number 7. Now we have done a detailed analysis of our financial health. In last step, we would bring everything together and we'll start looking at the net worth that we have. Is it positive or negative? We'll bring in the cash flow statement. Do we have surplus or do we need to reduce our lifestyle or increase our income? Have we insured enough and mitigated the risk for ourselves as well as our financial health? Is our debt manageable? Do we have a positive or negative credit score? This single page at the last step would act as your financial dashboard. This would tell you that how does your health look financially and what are the strong points and what are the improvement points that you need to consider in your financial journey. So why it is important for an woman? These everything will remain same for everybody, but women has to consider different kind of expenses in their cash flow statements for a social life or um, any other cultural events that they get that they need to manage for a family. Also for the different kind of investments like retirement emergency funds, they need to consider the caregiving responsibilities, the career breaks that they have in their life. With that, I would leave you to do this assessment for yourself. Sit for 1 to 2 hours and do this assessment for yourself. You can do it with your family, your partner. I leave you the level of confidentiality that you want to keep during this journey um, to yourself to decide. And at the end, this brings us to end of today's session, wherein we have created a plan to assess our financial landscape for today. In our next session, we will move into setting up a financial goals, and this current financial assessment would act as a starting point for that. This assessment will convert into a financial plan or a journey towards the end goal. With conclusion, thank you for watching me today. Remember, knowing where you stand is a first step in building a future that you deserve. So, with that, take care and happy learning. I'll see you in the next session.